Google just dropped its Q2 2026 earnings, $119.8 billion in revenue. But the number that has Wall Street buzzing? Google Cloud revenue surged 82% year-over-year. This isn't just an earnings beat, it's a signal that the AI arms race is reshaping the entire tech landscape. Alphabet, Google's parent company, reported after market close on July 28. The stock initially popped 4% in after-hours trading before settling. Analysts had expected around $115 billion, but the cloud division. Let's break down the numbers. Total revenue hit $119.8 billion, up 15% from last year. Net income was $29.4 billion. But the star was Google Cloud, which brought in $12.3 billion, up from $6.8 billion a year ago. That's an 82% jump. For context, Google Cloud's growth rate now exceeds both Microsoft Azure and Amazon Web Services. Azure grew 33% last quarter, AWS grew 19%. Google's 82% is more than double its closest competitor. The gap is widening. What's driving this? AI workloads. Enterprises are flocking to Google Cloud to train and deploy large language models using Google's custom TPU chips and the Gemini model family. The AI infrastructure segment alone grew 140% year-over-year. CEO Sundar Pichai highlighted on the earnings call that Google Cloud now counts over 70% of generative AI unicorns as customers. Names like Anthropic, Cohere, and Stability AI all run on Google's infrastructure. But it's not just startups. Major enterprises are migrating. Volkswagen, Ford, and Goldman Sachs have all signed multi-year cloud deals with Google in the past quarter. The enterprise pipeline is the strongest it's ever been. Google's advertising business also performed well, bringing in $72.5 billion, up 10%. YouTube ad revenue hit $9.8 billion, driven by Shorts and connected TV. But the cloud story is what investors are focused on. The Other Bets segment, which includes Waymo and Verily, reported $1.1 billion in revenue, up 35%. Waymo is now operating in 15 cities and completing over 200,000 paid rides per week. Alphabet's total capital expenditures hit $14.2 billion this quarter, up 60% from last year. Most of that is going into AI infrastructure, data centers, TPUs, and networking. The spending spree is accelerating. Wall Street is taking notice. At least 15 analysts raised their price targets on Alphabet after the earnings. The average target is now $225, implying 18% upside from current levels. Morgan Stanley called it a paradigm shift. But there are risks. Google's search business faces growing competition from AI-powered search engines like Perplexity and ChatGPT Search. Regulatory scrutiny in Europe and the US also remains a cloud over the stock. The Department of Justice is still pursuing its antitrust case against Google's search monopoly. A ruling is expected later this year. If the remedy includes forced divestitures, it could reshape the company. Despite those risks, the cloud momentum is undeniable. Google Cloud's operating margin improved to 18%, up from 5% a year ago. The business is becoming profitable at scale, which was always the question mark. Google's AI model Gemini is also gaining traction. The latest version, Gemini Ultra 2, now powers features across Search, Workspace, and Android. Over 2 billion people interact with Gemini daily through various Google products. The enterprise AI platform Vertex AI saw revenue triple year-over-year. Companies are using it to build custom chatbots, code assistants, and data analysis tools without needing their own AI infrastructure. Google also announced a new partnership with NVIDIA to integrate the latest Blackwell GPUs into Google Cloud. This gives customers access to the most powerful AI hardware alongside Google's own TPUs. What does this mean for investors? Alphabet's earnings show that AI monetization is real and accelerating. The cloud business is no longer a side project, it's becoming the main growth engine. The stock trades at 28 times earnings, which is reasonable given the growth rate. Compare that to Microsoft, which trades at 35 times earnings with slower cloud growth. Or Amazon at 40 times. Google might be the most undervalued of the hyperscalers right now. But there's a wild card, the digital dollar. Meta recently announced it's rolling out stablecoin payouts for global creators. If stablecoins become mainstream, Google could integrate digital payments into its cloud and advertising ecosystem. Google has filed multiple patents for blockchain-based systems and digital asset management. While they haven't launched a crypto product yet, the infrastructure they're building could support Web3 applications at scale. Back to the earnings, Alphabet also announced a $70 billion share buyback program and a dividend increase of 10%. That signals confidence from management that the cash flow will keep growing. The free cash flow for the quarter was $18.5 billion, up from $13.2 billion a year ago. That gives Alphabet enormous firepower for acquisitions, R&D, and returning capital to shareholders. One area to watch, Google's headcount. The company now has 195,000 employees, up 8% from last year. Most new hires are in AI and cloud engineering. The days of mass layoffs seem behind them. What about the competition? Microsoft's Azure is still larger in absolute revenue, but Google is growing faster. Amazon's AWS is also facing slower growth as enterprises diversify their cloud providers. The AI chip shortage is easing, which could further accelerate Google Cloud adoption. Custom TPU v6 chips are now in production, offering 4x the performance of the previous generation at the same cost. So what's the bottom line? Google's Q2 2026 earnings show that the AI investment is paying off. Cloud revenue surged 82% to $12.3 billion, total revenue hit $119.8 billion, and the company is generating massive free cash flow. For investors, Alphabet. If you enjoyed this deep dive, hit that like button and subscribe for more earnings analysis and tech breakdowns. We'll be covering Microsoft and Meta earnings next, you won't want to miss it.